Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Eurodollar. An outside day and bearish harami on Friday after the previous session's second bullish white soldier. The market initially pierced the congestion from March 2020 and December 2023 high at 111.39, but did not make it up as far as the purple middle time, currently at 111.75, of the late June to very early August bullish Andrews pitchfork, and the interesting cap of the dark blue declining, January to February 2021 reverse head and shoulders pattern, well, that's currently at 111.65. Instead, turning lower and closing more towards the purple lower time, currently at 110.34. Further down we have the bright red slowly declining head and shoulders neckline extension of the July 2017 to November 2018 move at 109.89. So far today, a small follow-on lower, approaching the lower time again. Cable, aka sterling against the US dollar. A key reversal down and bearish engulfing pattern on Friday after the previous session's second bullish white soldier. The market was interestingly turned lower, same as the prior week, by the seemingly lesser 61.8% Fibonacci line of the June 2016 to September 2022 move at 132.46. Prices punched down through and closed below the dark blue middle time, currently 131.88 of the bullish Andrews pitchfork for the late June to early August move, as well as the July 2023 high at 131.43 and the December 2020 low at 131.33. Plus the upper bear channel line of the small bear channel formed over the last 2 weeks. And that's currently at 131.20. This move continues to raise the question as to whether the move over the last few weeks is a bullish halfway hesitation or a double top in formation. Further down we have the July high at 130.44 and then a combination of the rising short medium moving average, currently 129.12, and a dark blue lower time, currently at 129.08. So far today, a small follow-on, it's starting to get a little bit bigger now. A small to medium-sized follow-on lower, edging down and out of last week's range and towards that July 2024 high. Euro sterling. A key reversal up on Friday and effectively a fourth bullish white soldier as well, as the market built on what seemed a dubious indecisive spinning top in the previous session, but one that had closed back up over the broken lower trend line, currently at 84.13 of the recent August-based descending wedge pattern. The base of the move higher was the test down towards, and I have to say, avoidance of the congestion at 84.05 dating from August 2022, with further congestion below from the same time period at 83.86, which was responsible for July's lower 83.81. Meanwhile, overhead we have the April 2021 lower 84.70 and the flatlining green short medium moving average, currently at 84.66, plus the descending upper trend line, currently at 84.67, the same August-based descending wedge pattern. So, I previously laid out some potential targets for a move below this August-based descending wedge pattern. Primary target 84.37 was reached 2 weeks ago, and we still have the secondary hard to reach target X1 down at 83.34. I am minded today to retire this secondary harder to reach target after today's commentary. Okay? Overall, prices have stopped moving lower and have started to pull back upwards within the large June to July sticky congestion zone between roughly the April 2021 low above us at 84.70 all the way down to the 2024 low in July, 83.81. The zone is not specifically defined, so if prices do move, well, you may find some places with little or no support and others with a lot. So far today, a slightly lower open, but we've seen attempts to pull higher, testing Friday's highs and eyeing the combination of resistances up in the 84.66 to 84.70 area. US dollar against the Japanese yen. A fourth bearish black crow yesterday, and a very interesting one as well. It was the lowest close since the start of January and the second lowest low this year. On top of that, it was a first clear move down and closed below the dark blue lower time, currently at 143.61 of the December 2023 to early August 2024 bullish Andrews pitchfork. Additionally, the market dropped down to the bright red lower time, currently 141.80 or 141.80, let's try that again, of the bullish shift pitchfork with the same move as the bullish Andrews pitchfork before halting. It is also very close to the August low at 141.66. I continue to ponder as to whether this market has maybe reached a decision time. My initial thought a few days ago had been yes, then there was some indecision, but perhaps now yes again. See, overall, this is the pattern formed over last week that's important, and that's a weekly key reversal down. Now, so far today, a lower open, but then a reactionary move back up, though we have been shy of testing just short of the overhead bridge dark blue lower time, though I expect that will be the next area of resistance. Beyond that, we have the 50% Fibonacci line, the January 23 to July 2024 move at 144.58. US dollar against the CNH, the offshore Chinese yuan. An indecisive spinning top on Friday after the previous session's bearish opening Black Mariposa, but with the second lowest low for this year. Prices dropped down towards the June 2023 low at 708.57, but decided not to try it, instead rising back upwards. Overall, the market is still within the finessed August-based descending wedge pattern that became an August-based bear channel, currently at 700.46 to 711.34. Further up, we have a lesser Fibonacci line at 711.61, as well as a dark blue upper bear channel line, and what prices may have generated as congestion throughout August there as well. Now, so far today, a slightly higher open and a move up, piercing both the dark blue upper bear channel line and the lesser Fibonacci line at 711.61. Not really exploiting it, but then it's still early on at the moment. US dollar against the Mexican peso. A reactionary bullish white soldier on Friday after the previous session's shooting star pattern. I'm reserving judgment as to whether the shooting star pattern is a type 1 bearish or a type 2 bullish pattern. It was nevertheless the highest close since October 2022. Prices dipped down to use as a base the dark blue, very acute, lower time, currently at 1984.61 of the early July to mid-August bullish Andrews pitchfork, before pushing higher over the previously mentioned and pierced congestion band between 1987.56 to 1991.31, containing the December 2022 high at 1991.31. This time prices closed over it. Further down, we have the bright red middle time, currently at 1976.43 of the mid-May to mid-July bullish shift pitchfork. Whilst overhead, prices once again pierced the late July high at 20.04.30, but failed to close over it. Beyond this is the October 2022 high at 2017.20, which so far has not been tested, though it has been approached. Beyond that, there is relatively little until the September 2022 high at 20.57.65. There is still a question outstanding as to whether the market, whether the mid-July to date action is a bullish halfway hesitation or a double top, and that's a really interesting question at the moment. Now, so far today, a lower open, but really not going anywhere right now.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.